What's going on at the FASB and the AICPA? You'll find out. This is the IssuesWatch Podcast. Hello, and welcome to the IssuesWatch Podcast. I'm Brad Muniz, your host for the accounting and auditing episodes. I'm a partner in charge of accounting and auditing at SobelCo. The format of this session, I will be covering different accounting and auditing topics that are generally issued by FASB, in the FASB update, AICPA or AICPA updates, and any other areas, including PCAOB, SEC, and anything else that comes up that's A&A related so that you can get A&A information. A&A being accounting and auditing. I know I'm sitting here alone and you're usually used to my other presenter. Well, one day we will get Frank in here and he will give us his wisdom and probably shut me up where proper. But let's just jump into the content. And before I jump into the content, let me just give my disclaimer that the views and the statements expressed herein are my own and not necessarily those of the NJCPA or SobelCo. So thank you very much. FASB update. What I like to do is I like to give you some information, since we're doing this bi-weekly, about information that has come out over the past couple weeks. Maybe a little bit more, maybe just recent as much as last night, but we try to give you as up-to-date information as possible so you can use this as your news source. So the FASB came out with ASU 2021-05 leases. Lesser certain leases with variable lease payments. What does that mean? So the FASB has come out with the lease update with 2016 and the ASU, and they said, okay, you have to capitalize all leases generally for lessees as compared to in the past. Well, this section now covers a concept relating to the lessor, and if the lessor has a lease that has variable payments. Well, if you've been following the ASUs as it relates to the leases, you know that variable lease payments cannot be part of the lease calculation. Unless it's based on some sort of, if it's not based on some sort of index. Well, what they determined here is if you're a lessor and if you have a sales type lease that generally would be capitalized and treated as a sales transaction, but because of variable payments, you'll be in a loss situation. They said that you should then treat it as an operating lease. So if you are a lessor and you have leases that have variable payments, you should be looking into this. Now, the difficulty with these sessions is they're only going to be 10 minutes, and I'm apologizing now in this first session to say to you, as you example here, is there's a lot of content that you're going to have to know as it relates to this topic. And I strongly recommend that you look into this and any other topic further that I mentioned. I'm here just to try and give you some information and give you lead-ins to what to know. As it relates to the leases that I was talking just before, I want to give a reminder to everybody that the lease pronouncement came out a while ago. Keep in mind, this lease pronouncement and idea came out in 2006 to 8, and then pronouncement actually came out in 2016, and it was going to be effective for this year. And because of the COVID situation, the FASB for private companies said, okay, we're going to allow you to defer one more year. So it's the lease pronouncement, especially for lessees, or lessors, but pick up on this for private companies. The lease pronouncement is effective for fiscal years beginning after December 15th, 2021, which means calendar years, it's effective for next year. Now, I know some people are out there going, well, I'll just wait till the audit of the 2022. Don't wait till then. This is a significant pronouncement. You want to be on top of this. I've tried to ask, are they going to push it again? Are they going to forgive it? Is the PCC, the Private Company Council, going to say, we're not going to do it? Every sense that I'm getting is that this is going through. The bankers want it. The financial institutions prefer it. This is going to go through. That's my understanding. Watch future updates. Maybe if it changes, if it does change, I'll tell you, and hopefully we can have a party and say we're not going to have to put it into effect. But as of right now, unfortunately, we're going to have to. Let's move on to the AICPA. There's not a lot of other FASB stuff. They I think they're, on a lull right now because it's the summer. Let's move to the AICPA. So the AICPA came out with Statement on Auditing Standards 144 related to the use of a specialist and the use of pricing information obtained from external information sources. What? So for most people that are watching this, this will not affect them. Now, I audit broker-dealers. I know Frank Boudelet, who's not with me. Frank, he also audit broker-dealers. And we have to use external pricing sources. That's just one example of them. There's other instances too. So SAS, I think it was 72, came out with the use of a specialist. I know I'm probably off by a number or two, and somebody from the A&A resource group is going to send me an email. It came out for the use of a specialist and talked about documenting the requirements of documenting the use of a specialist. Well, this just enhances it further, and it specifically relates to the use of a specialist, which I found interesting about this coming out, and the little conundrum that I'm in on this one is I said that this affects us on broker-dealers, which is good because we handle broker-dealers. However, most of the broker-dealers fall under the PCAOB standards and don't follow the SASs after 100 anyway. So it's good for me to read and good for me to know. I have to know this, but as it relates to the PCAOB audits, I have to follow their standards. So if you do have a use of a specialist and use of pricing information, please read into this. This is very important for you to be following. Okay. Not a lot of stuff at the ICPA either, but there's some other items that I found very interesting that I want to bring to your attention. I mentioned this a few seconds ago, the New Jersey Society A&A Resource Group. Fabulous group of people there. I've been involved for years, as all the committees are at the NJCPA, the tax group. I don't know, I know that somebody would be yelling at me right now for not knowing every committee at the society. But somebody brought up there about accounting for digital assets and how complicated it is and how the FASB's kind of taking like a little bit of a hands-off approach right now because they're not addressing it. The scary thing is it's not going to be treated as currency. It's they're saying it's treated as an intangible asset. Now, if you look at cryptocurrency, you know it does a lot of this. Well, if it's treated as currency, that's a fluctuation. FX. So I know it's not foreign currency, but it could be treated as FX. If it's an investment, they go up and down. But if it's an intangible and they go down, what do? We know what happens with impairments under GAAP. If you have an impairment, you can't recover that. Now, are you treating an asset under 825 where it's a fair value of assets and liabilities under 825? Maybe. But why am I bringing this up? Because the AICPA actually has a practical guide for accounting and auditing of digital assets. You can Google it. I hope Google, that's not a license issue for me to say that, or Yahoo, whoever it is, you can find it on the internet. Look under AICPA, Accounting and Auditing for Digital Assets Practice Guide. I strongly recommend you look into it and find out more information about this because this is going to become big and we're going to have to be following this. And we as accountants have got to stay in front of something like this. Okay. One of the big changes that's come up, and I was just talking with somebody on the golf course the other day, and he works for a very reputable firm. And I said to him, have you heard of the changes to the CPA exam? He said, no. I'm like, how could you not know? And maybe I'm just living in this world a lot of with the AICPA being an AICPA council in the past, but the CPA evolution, which the AICPA has put a lot of effort towards, is kind of changing the mindset, from the old 4-part CPA exam, you study for just the 4 areas and take the test and you move on. They've moved now to a core plus discipline model where accounting, auditing, tax, and technology are kind of the core. And that's part of the exam. And then from there, you're going to branch out and determine the different disciplines that you want to concentrate on. Now, the person did ask me a good question. I didn't have an answer to it. Can you do multidisciplines? I imagine so. I honestly don't have an answer to that. I should know that, and I apologize. I apologize to Barry Melanson with the AICPA for not having that information and Susan Coffey. But the other areas are tax compliance and complanning, business reporting and analysis, and information systems and controls. So look into this, especially, and it's supposed to be, it's in 2024 that this is supposed to take effect. I strongly recommend if you have younger people working with you, or if you have younger people that are in college, get them ready for this. I know that the colleges are aware of this. The AICPA has been talking to them about it, but just start getting them ready. 2 other areas I want to go over. Something that came up at the A&A resource group. I know I keep bringing it up, but it's just a great group of people. Accounting for bait. thanks Alan Sobel, our managing partner, for getting this through and driving us crazy. But the business alternative income tax and how is it treated? Well, a lot of us put it into effect and treated it under 740 accounting for income taxes. Well, Mike Kaplan brought up that he was at a looking at a plain English seminar, and they said it shouldn't be treated under accounting for income taxes, almost treat it as a distribution. Well, that's significant. That's really significant because that could blow covenants. That has a lot of ramifications. So I really need the FASB to focus on this and kind of treat it in a plain private company counsel format of this is the basic way. And the last thing I'm going to bring up is, if you've been watching, there's a lot of SPAC restatements that have been going on because of the warrant valuations. And that's part of the reason that my buddy Frank ain't here. And Frank, we miss you, and I hope you're not going crazy with all those SPAC restatements. If you do have warrants, or you deal with warrants, or you deal with SPACs, and you don't know about this, please look into this. That's our session for today. We try and hit it right around the 10-minute mark, and we'll give our closing remarks. But I want to thank you for watching. And if you have any comments, please feel free to reach out to Jim Hardenberg. He's kind of my Gelman. Gelman, where are you, Gelman? So, no, if you have any questions or comments, please feel free to reach out to me. Okay, so for those who conduct single audits, be sure to hone your skills by attending an update of the New Jersey Society CPA's August 24th webinar, 2021 Single Audits, New Triggers Resulting from COVID-19 Funding. It's going to be big. Not it's going to be big because of this, but I will be there moderating the session with two of my Sobel colleagues who are really up on this information. Register at njscpa.org. Did I say S? Uh-oh. You better leave that in for Don. Don't edit that out. Register at njcpa.org/events, where you can also find a number of other ANA webinars and seminars and tax and everything. As I mentioned earlier, NJCPA members involved in the ANA should join the Accounting and Auditing Standards Interest Group. Go to njcpa.org, groups to join. They're an unbelievable group of people. You learn a lot of information. You can interact with them as much, even with the same thing with the tax groups in technology, et cetera. Okay, thank you for joining us. We'll be back with new ANA episodes in 2 weeks. You can access all IssuesWatch podcast episodes at njcpa.org/IssuesWatch. I am out of here.